Hello everyone, this is VR, and in this video I will discuss my trading methodology, trade management, and money management. Please note that this video is for informational purposes only and it is not financial advice. I swing trade common stock using the Al Brooks price action method. In my opinion, Al Brooks is the godfather of price action, and there is no other method that is as thorough as the one that Al Brooks describes in his Trading Price Action 3-book series. My trading system is designed to work around a full-time job where no input is required during the regular trading hours. All orders are submitted post-market to be potentially filled on the following trading day. My trading system is made to compete in a marathon and not a sprint. I am not going after a quick buck, but rather a methodical thriving of the equity curve on a solid footing. To open a position, I use either a limit order or a stop limit order to make sure I get a good fill. All positions use a profit taker and a stop loss and are allowed to work on a set and forget basis without micromanagement. I do not use alerts for open positions or submitted orders. For trade management, I take half at 2R, then move stop on remainder to slightly better than break even as I let the trade work towards the second target. At the second target, I take half the remainder and then set the stop at the 2R level. I keep going in this manner until the trade hits all respective profit takers that are designated for the trade, or I get stopped out. The moving of the stop takes place when the market is closed. Let's review the image that we have in front of us as an example to analyze what I just told you guys. So, for example, if I am looking to enter a long on this green hammer of a signal bar, say for example I will be entering as the price moves up above it, and my final target, as you can see, is right up here, which is just slightly below this high. So our 2R level is right at this black line over here. So as the price moves up through the 2R level, I take half, I move the stop just slightly above my entry point, and in this case, since my final target was basically right about here, I am looking to take the remainder of the position off right at that target, but keep in mind that as the price is allowed to travel up from 2R to the final target, I am in a riskless trade because my stop is slightly above break even in this case. Regarding money management, I allow myself to have up to 10 open positions that have risk. As an example, let's say I have 7 open positions that haven't yet hit the first profit taker at 2R, and I have 3 open positions that have hit the first profit taker, which is at the 2R. Since the 3 positions that already have hit the 2R had their respective stops adjusted to slightly better than break even, therefore they become riskless trades to me. Then using that logic, I can open 3 more new positions to have a total of 10 open positions with risk on the table. As the equity curve rises, I increase my risk per trade at strategic checkpoints. For example, if initial account value is $150, I can have 10 open positions with $15 of risk on each one. Once the account value rises to $300, I will allow myself to have 10 open positions with $20 of risk on each one. This way, as the equity curve grows, I'm increasing my trade size while continuously working on protecting my gains. And that's all, folks. If you have any questions, please post them in the comment section below. Thank you for watching, and I'll see you next time.